Hello, I'm Nathan from Magma Partners. Thanks for inviting me. I think I have the best slot here at the end of the day, so hopefully everyone's still awake, and thanks for sticking around to listen. Thanks to the organizers and for all the other speakers. I really appreciate being here. So I'm going to tell you a little bit about what we do at Magma and a little bit about our investment thesis, and hopefully get to the question and answer as fast as possible, because that's probably the more interesting part of what we're going to be doing. So, we're Magma Partners. We're a US, Chilean, Latin American venture capital fund. We started in 2014. I'm a two-time entrepreneur that sold my businesses. Went to Chile in 2010 as part of the pilot round of Startup Chile. And I quickly realized that I wanted to help create a venture capital fund that I wished I'd been able to meet when I was in Chile. And luckily enough, I was introduced to Francisco Sainz, who's here in the audience somewhere, who runs a Chilean family office in 2014. And he was looking to diversify and also give back and help the next round of entrepreneurs. So we started in 2014 with the most of the money coming from Francisco's family office, a little bit from me. And we invest in two types of companies. One, companies that have their tech and sales teams in Latin America, but target the US market. And then companies that are doing fintech, insurance tech, and potentially blockchain, but operating in Latin America. Looks like that didn't come up, but we can. So we've done 38 investments. We've invested about $3.5 million. Our companies have gotten about $25 million in US follow-on funding. They do about $20 million in revenue in the US, and there's about 500 employees in the portfolio companies all around the world. So an example of one of the companies that fits the Latin American fintech is a company called Portal Finance. They're operating in Chile and Colombia, and they do invoice-backed financing. They just closed the deal with BTG Pactual in Chile for $200 million to lend to small and medium-sized businesses in Latin America. So this is an example of a company that's doing innovative stuff in fintech in Latin America that's actually more advanced than anywhere else in the world. Another example of a company that fits the other investment thesis is Group Race. So Group Race has offices in Santiago, they have offices in Houston, Texas, and then also in the Philippines. And what they do is they allow you to book restaurant reservations for big groups. And then the restaurants compete over your business, donating between 5 and 25% of the bill to the charity of your choice. And they've donated more than $1 million to charities this year. So it looks like this didn't work too well, but basically this slide is about how we invest. So we invest $25K to $75K at pre-seed in Latin America, and then you can follow on with up to $500,000. The right side of this was supposed to be the comparison from Latin America to Silicon Valley. Because what we try to do with the companies is invest the first two rounds in Latin America and then help them get to where the capital is in the United States from US capital markets. And that allows us to, one, build stakes in companies at lower valuations and lower amounts of money than you would in Silicon Valley. So for us, we think it's a little bit less risky. And then two, it allows the entrepreneur to not get overloaded with crazy terms that you might see in Latin America. We take the same terms, entrepreneur-friendly terms, from either Y Combinator or Techstars in the US and try to make them into the US market, and then push that into the US. So this is our team. I talked about Francisco before. Gia's in Beijing. Pedro Pablo is a Chilean who's based in Austin who worked at Techstars. Neil's in New York. Cody's a venture partner in Texas and Washington, D.C. We have a person in Mexico, and then Pierre is in San Francisco. So why now? Why are we doing this? And why do we think that investing in tech startups in Latin America actually makes sense? So right now we think that Latin America is at an inflection point. And you can see where venture capital is basically doubling every year into Latin America over the last 3 years, and should do it again this year. There's been a first wave of entrepreneurs that started anywhere between the early 2000s all the way through, say, the 2010s, that maybe some had success, but many failed. And they learned hard lessons, and they're starting new businesses. There's also a huge amount of foreigners coming to Latin America and starting businesses in places like Chile, Colombia, Mexico, Brazil. and probably Peru as well. And people are taking knowledge that they maybe learned in startups in the US or Europe and starting to share that knowledge in Latin America. We see a really highly motivated, well-educated workforce in Latin America that's trying to do new things and trying to solve local problems, and we think it's really interesting. And if you look, there's lots and lots of US funds making their first investments in Latin America, or first significant investments in Latin America over the last few years. So we really believe in building capital, but also building community. So one of the things that we make sure that we do is we want to try to push the ecosystem forward by setting the example of entrepreneur-friendly deals. We see all sorts of crazy stuff from either family offices that don't really have much experience in startups, and then also some funds that maybe are trying to put in terms that would never fly in the US. We think that most of that is not because they're trying to be mean or bad to entrepreneurs. It's generally just ignorance. So we're trying to be very transparent and push the ecosystem forward with fair, entrepreneur-friendly terms. One of the other things that we think is super interesting, especially with leaving the tech and sales teams in Latin America and targeting the US market, is it stops the brain drain. There's really a lot of Latin American entrepreneurs and people who work in tech that maybe would love to live in their home country, but maybe feel like they need to go to the US to work on the most interesting problems. We're seeing people staying in their home country and building an ecosystem, building companies, and providing an example for other people who want to continue to do startups or get into tech by being able to have the best of both worlds, living in their home country, but also earning a US salary and selling in US dollars and being able to have access to the biggest capital market in the world. We're also really pushing forward to breaking down barriers that have been in Latin America previously and still maybe are starting to change. Things like classism, racism, sexism, and maybe if you look at most of the big companies in Latin America, they're probably not always hiring the best person for the job. They're looking at maybe a specific high school or a specific university. We try to push all of our startups to hire the best person for the job, make sure that all employees get equity with stock options, and really try to transmit that culture of openness into Latin America. And what we're really trying to do, in addition to, obviously, we want to make money as a fund, but we want to push the ecosystem forward and start a virtuous cycle where entrepreneurs are successful, employees are successful and actually see money out of their stock options, start their own companies, and become investors and start their own funds going forward. So what are we doing to actually support the ecosystem instead of the fund? We started the Magma KR Space Accelerator in China. It's the first China to LATAM accelerator in the world. We did this in January, launched it in Shanghai. And what we see is China is a really big influence in Latin America and will be going forward. You can see it from Didi, which is Chinese Uber, buying up 99 Taxi for about $1 billion in Brazil, launching in Mexico as well. And we see that, we think that Chinese investors are going to be more likely to be doing bigger deals in Latin America than potentially US ones. Because there's less of a history of, say, prejudice or ignorance, more about the money and deals from China to Latin America. Another thing we're doing is we do a podcast called Crossing Borders. If my presentation would have worked, it would be, you can find it searching Nathan Lustig Crossing Borders, but we do interviews with Latin American entrepreneurs and investors in English to raise their profile in the US, because we think that there's amazing stories coming out of Latin America, but that generally don't get covered in the US. Another thing that we do is LATAM List. So latamlist.com. We have one article every single day about something really interesting that happened in tech. So companies that raised money, companies that did exits, deals that are happening. So check out LATAM List. If you have stories you want to share, please send them to us. And I'll end with this. So I'm stealing this from one of our portfolio company entrepreneurs, Devin Baptiste from Group Race. And he always talks about olive oil. Because when you have olive oil, doing the first press makes the highest quality and the highest quantity. So I think we're in the spot where this is the first press for entrepreneurship in Latin America, and I invite you all to be part of it with us. So thanks for having me, and thanks again.